Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, the mutual fund industry's net assets under management have climbed to a record 39.33 lakh crore rupees in the month of August. Also, according to the AMFI data, we did see this time around that the equity funds have actually seen a 31% less inflow in August when you compare it to the previous month. Now, to understand the data and the trends in the mutual fund industry, I have with me the person you really want to hear it from, Mr. NS Venkatesh joins in. He's the Chief Executive at AMFI. Good afternoon, and thank you so much for being with us on this show. Mr. Venkatesh, great to have you with us. Well, we've seen mixed trends this time. So let's talk about the good part first. Is it really heartening to see that the retail mutual funds, AUM, the SIPs, the folios are all at an all-time high, the demat account numbers also at record high? And does it really signal a strong retail trend in the Indian investing space as well?
What we have been seeing is that there is a huge amount of retail participation in the equity market and also in the mutual fund market. So essentially the mutual fund segment, the mutual fund as an investment vehicle has been completely welcomed by the retail investor. This month we have crossed 20 lakh crores as the AUM for the retail. So that's a good number to have. The folios also have increased. Year on year, it's around 17% increase in the AUM. So that way, there is a huge amount of participation by the retail. The retail is trusting the mutual fund investment vehicle very well.
Absolutely. But sir, there's been a slowdown in the equity mutual fund inflows, which have actually declined to this 10-month low, about 6,100 crore rupees in August. When the markets have been approaching record highs, we are seeing this slowdown. And in fact, there has been a consistent slowdown from May or June onwards as well. What do you make of this slowdown, and is it concerning at all?
I would first allay the concern. There is no concern at this particular point of time. The second one I would say is that essentially during this month, or the last couple of months, they have been booking their profits because markets have been reaching newer heights. So essentially they were using this opportunity to book their profits. Where the goals are met, they have taken their money, because this is the period where essentially the children will go out of the country for studies. So they may have to pay the fees, the boarding expenses, and all those things. So whosoever has invested with that goal in mind will withdraw and then use that money for the educational purposes of their children. So I think nothing of concern, but factually, yes, the redemptions have been more than the inflows. So to that mention, the net flows are coming down substantially.
Also, sir, if you could help us understand, we saw the net inflow in the equity-oriented, say, Flexi cap funds. These were the highest in August when you compare it to the others like large caps or mid cap, even multi-cap funds. Now, the net inflow in Flexi cap was actually to the tune of 2,100 crore rupees. So, what do you make of this trend? Is it likely to continue? Are more people tilted towards these Flexi cap funds going forward?
The Flexi cap gives them an advantage because it gives a wider horizon, in the sense that the number of stocks will be much more higher. So it will be a combination of large cap and mid cap and all those things. So to that much extent, depending upon which segment performs better, the fund manager will be able to take positions in either the mid cap or the large cap, that sort of the thing. So I think that is where I think they are putting their money in Flexi cap, because if you see of late, the mid cap and small caps have corrected substantially in the past. So this is attractive at these valuations. So mainly the mid caps and small caps are started to accelerate. So I think they are taking that advantage by going into the Flexi cap.
Right. Also, sir, could you share with us, how are you reading into the outflows in hybrid category, the thematic funds and the ELSS funds right now? And is it likely to continue?
ELSS funds, it is the normal when 3 years is over. So to that much extent, they may withdraw the money. So that is where it is happening. So that they don't continue with that, they withdraw the money and maybe they again re-enter in some other segment. That will happen. In respect to the hybrid, the discounts between the discounts or the premium between the future and the cash is not in a great position for you to play around with the arbitrage funds. So that is why the arbitrage fund has shown a larger amount of outflow which has happened. So that's why I think the arbitrage is not doing a better performance in the month of August. Other than that, I think we don't have any cause for concern.
Okay. Okay. When we talk about the fixed income or the debt mutual fund segment also, this time around, what we've noticed is that the liquid funds, along with the ultra short duration funds, these are among the top categories that have seen net positive inflows. And in fact, when we compare it to July, there's been a big jump in the net inflows in these categories. So your thoughts here, and what's pulling investors in this fixed income debt mutual fund category, especially in the liquid fund category?
Liquid funds will be generally utilized by the corporates or the banks themselves. So to that much extent, the volatility in the flows of liquid is much more pronounced. So I would say that we should not be. If it is falling down, also we should not be worried. If it is going up, also we should not be elated, because it moves. The swings are very, very far and wide. That sort of thing. But despite that, maybe I would say that some of the people who had taken money out from the equity might have put it in the liquid fund as a temporary cash management sort of the thing. And then later, when they see an entry opportunity, they will again come back into the equity. That is.
But a higher, interest rates than the fixed deposit rates at this point in time, is that one reason why investors are more parking money in the liquid funds?
No, not so. Not so. Some of the duration funds, the short duration fund, the medium duration funds, there you would have seen a negative flow. That is essentially because of the fact that the interest rates are higher. The monetary policy is more towards tightening. So because of that, essentially people find that there will be huge amount of volatility in those funds. So they have taken the money and maybe put something back into the liquid funds. That could happen. That could happen.
All right. So going forward from here, what are the trends that you're expecting in the mutual fund space? We are seeing the markets are clocking in newer highs right here as far as this year is concerned. Most of the experts are also counting on some fresh record highs, perhaps by Diwali, to be made as well, with the inflows coming back from the foreign investor too. So there is more money coming in. So far, it was only the retail investors' money, but now you have both the money, coming along together. Your thoughts on the kind of trends we are likely to see, the fund categories that will be most preferred by the investors in the rest of the year?
I would say that essentially equity will come back into flavor. People will put money in the large cap and mid cap funds. That will happen. The thematic is taking a backseat because essentially the pharma and those sectors are not doing that great. So to that much extent, the thematic is not doing that well. So which may rebound after, say, October, November. That can happen. Then I would say passives, you are getting a lot of money. The index funds and the ETF, you are getting a lot of money compared to the active. That trend will continue.
Okay, well, thank you so much, Mr. Venkatesh. It's been great to seek all the insights from the mutual fund industry trends from you. As is always, pleasure is ours to have you on Business Today TV.
Thank you so much.
If you like the video, do like, comment, share and subscribe.